I've never seen commodity prices rising like this. Gold prices were up about 20 bucks today. We're back at 2,700. Silver had a really strong day, was up about 70 cents. We're up about another dime this evening. We're almost at $31 again. We're at $30.80, so back above 30. Despite that, most silver stocks were down, 1, 2, 3% today. Gold stocks were barely up. Again, nobody wants to buy gold stocks because everybody is so optimistic on the economy because they think everything's going to be great now that we've reelected Trump. Again, everybody is in for a huge disappointment when the problems that got Trump elected get worse after he's elected.
In today's news recap, silver won't lose its luster long term despite economic headwinds, Bank of America says. Silver prices could see headwinds in the near term due to broader economic uncertainty, although the metal has received support from global consumption outpacing supply, according to analysts at Bank of America. A stronger U.S. dollar and weak industrial activity has placed pressure on silver recently. While President-elect Donald Trump's plans to impose strict import tariffs on Canada and Mexico, key suppliers of the metal to the U.S. have threatened to dislocate silver markets, the analyst said in a note to clients. However, silver's price has hovered at around $30 an ounce over the past 9 months. The analysts led by Michael Widmer argued that, in their view, this resilience has been tied to consistent silver market deficits, with limited mine production growth, a key source of price support in particular. Global consumption of silver outpaced production of the metal in both 2022 and 2023 and is expected to have done so yet again in 2024, research from Bank of America found. They estimated that over 37,000 tons of silver will be consumer this year, down by 0.4% from the projected amount in 2024, while output is seen edging up by 3.5% to 33,000 tons. Despite the change, the silver market would remain in deficit, a trend the analysts anticipated will continue into 2026. The silver market has been in deficit for a while now, and those shortfalls finally count, the analysts wrote. They noted that this support has been mirrored in some regions, with silver trading at a premium in India and consumers in China having to pay up to source ounces. As a result, silver has solid fundamentals, adding that they are constructive further out on the metal. Silver won't lose its luster long term, they said. Now we'll show you the best clips from the latest interview. But first, subscribe, and turn on notifications so you don't miss our daily recaps. Also, check out our NordVPN deal. It's the fastest and most reliable VPN on the market. If you're a stacker, this is a perfect fit for you because safeguarding your internet data from government surveillance will be crucial moving forward. For a small cash outlay, you can ensure you're protected from prying eyes. Check the link in the pinned comment and get 3 free months today.
This is a boom in commodity prices. We're up 5.5% so far in 2025, and we're only 2 weeks into the year. This is a big, big move. Oil prices closed today above $80 a barrel. We're up almost 4%, right? Wall Street is celebrating low inflation. At the same time, oil prices are surging by 4%. And that's despite the fact that we got a ceasefire in the Middle East, right? That should have brought oil prices down, but they went up. So oil is going to be booming. I think we're going to be back over 100, maybe by the end of the first quarter. The CRB index was up 1.6% today. It's at a 17-year high. The last time commodity prices were this high was 2008, before the financial crisis. And it took the financial crisis to bring prices down. But the main reason that the CRB is still about 20% below its record high from 2008 is because oil was over $140 a barrel back then. It's only $80 now. Oil's cheap, but it's not going to stay cheap. All prices are going up. So Wall Street is oblivious. These are leading indicators. If you remember, commodity prices really started to boom in the second half of 2020. And I was talking about that on this podcast constantly, how we were going to have a big move up in inflation. Just look at commodity prices. And that's when the Fed was not worried about it at all. It still was worried that we didn't have enough inflation. And then even after we started to see these big jumps in the CPI in 2021, and the commodity prices kept going up, the Fed was saying it's transitory, don't worry about it. And I was saying it's not transitory. Look at commodity prices. They're a leading indicator. And the big increase that we have in commodity prices in 2024, that's not going to show up in the CPI until 2025, this year. So CPI was up 2.9% last year. Now we have soaring commodity prices. So what's the odds that the CPI is going to be up less in 2025 than it was in 2024 before we had this big run up in commodity prices? I don't know if you're paying attention to what's happened in some of these prices. I jotted these things down yesterday or before today's rally. But year over year, cocoa prices are up over 170%. 1 year, 170%. Coffee, 75%. Natural gas, 50%. Wheat, 45%. Sugar and oil, 40%. Soybeans and copper, 30%. Gold and silver up more than 25%. I mean, this is inflation. You know, I looked at a chart of live cattle. Cattle's only up about 15% in the last year, but it's at an all-time record high. Look at that chart. I mean, cattle is going to stampede. I mean, one after another. Look at these commodities. These are incredible looking charts. And what's even more significant is that it's happening with a strong dollar, which is very rare. Normally, you get big moves in commodities when you have a weak dollar because commodities are priced in dollars. So what that means is that if you want to know what's happening to commodities in Europe, in Japan, in Canada, in Australia, in South America, you got to add at least another 4 or 5% to all these numbers. You know, that's why I'm talking about inflation is going to be, running all over the world. In Japan, and I've been talking about the yield on the Japanese government bonds. Well, now the yield on the 10-year JGB is 1.25. We just broke 1%, a month ago, and now we're at 1.25. Look, we're going to be at 1.5. Then we're going to be at 2. And once we break 2, Katie, bar the door, right? Yields are going to spike in Japan because there's a big inflation problem. They just came out just before I did this show with their PPI numbers, and year-over-year producer prices in Japan are 3.8%. Their consumer prices are 3.4%. We're way above 2. Remember, the goal was to get inflation up to 2.
In today's news recap, Goldman Sachs now sees $3,000 gold only next year as fewer Fed rate cuts slow 2025 price growth. Gold's record-breaking rally will slow down this year, with the yellow metal taking longer to reach the $3,000 level. But steady central bank demand remains a key long-term price driver, according to a leading investment bank. Goldman Sachs Group Inc. announced on Sunday that it no longer expects the gold price to reach $3,000 per ounce by the end of 2025, with the Federal Reserve's shallower rate cut path pushing the forecast to mid-2026. Goldman analysts, including Lena Thomas and Don Stuyven, wrote in the update that slower monetary easing will likely depress demand for gold-backed exchange-traded funds, ETF, in 2025. They now project the spot price to top out at $2,910 per ounce by the 2025's fourth quarter. The analysts added that weaker than expected ETF flows in December, driven by easing uncertainty after the U.S. election, also resulted in a lower starting point for gold prices into the new year. Opposing forces, lower speculative demand, and structurally higher central bank buying have effectively offset each other, keeping gold prices range-bound over the past few months, the analysts wrote, but added that demand from central banks will remain a key driver for prices over the longer term. Looking ahead, we forecast monthly purchases to average 38 tons through mid-2026. Goldman's economists now expect 75 basis points of interest rate cuts this year, down from their previous prediction of 100 basis points. The updated forecast is still more dovish than current market pricing as the bank sees underlying inflation trending lower. The analysts also said they were doubtful that the incoming Trump administration's policies will necessarily lead to higher interest rates. Now, we'll show you more clips, but first, subscribe and turn on notifications so you do not miss out our daily recaps, and check our NordVPN offer if you're a serious stacker, because keeping your browsing data safe from the government will be crucial moving forward. Also, check goldsilvermerch.com to get your gold and silver gear today. Premium quality shipping worldwide by Stackers for Stackers. Enjoy the episode.
All right. So we got a big rally in the markets today. The Dow was up just over 700 points. That's about 1.6%. Russell 2000 did even better, up 2%. The star was the NASDAQ, up 2.5%. Of course, we had a rally in the bond market as well. The bond market yesterday made new lows and yields made new highs. We had the yield on the 10-year government bond at Treasury at 4.8%, and the 30-year was back at 5%. But we had a rally today, which sparked a rally in the stock market because the government released what was purported to be good news on inflation, right? We got a benign inflation report. We got a report that was better than expected. And by better, I mean lower, right? We got less inflation than was expected. And this is what ignited the boom. We had a big increase in the probability that we're going to get, a March rate cut now that we got this good news on inflation. Well, what was the good news on inflation? Because the expectation, and this is the December number, so it is the final number of 2024, and the estimate was for an increase of 0.3. And we got an increase of 0.4. What's the good news about that? 0.4 is higher than 0.3. Now, the range of estimates was anywhere from 0.2 to 0.4. So it wasn't above the highest estimate, but it was the highest estimate, and it was higher than the previous month. And I think more significantly, if you take 0.4, which is 1 month, and you annualize that, let's say the next 12 months are the same as the report we just got. That's 5% inflation. 5%. That's a big number. That's more than double the Fed's 2% target. So how are we celebrating? Why did Wall Street look at what is a bad number and somehow decide that it was a good number and have a big rally party? Well, it's because the core number, right? And before I get to the core, let's talk about the year over year CPI, which was up 2.9%. That is 0.2 tenths hotter than the year over year from November. So we're moving in the wrong direction. Now, yes, the expectation was 2.9 and we got 2.9, but 2.9 is a long way from 2.
What do you think about John Rubino's bold prediction on gold and silver prices and his warning of an imminent collapse in the American banking sector? Is this a wake-up call for investors, or do you see it differently? Let us know in the comments, and don't forget to like and subscribe for more insights from leading experts like Rubino. Now watch this video right here because you'll love it. I'll see you on the other side.